In this video, we're going to look at the idea of trading using trend channels and how it might help us when it comes to assessing targets for swing trades. Hello, I'm David Jones, and in this latest video with Trading 212, we continue our technical analysis, charting and trading series. In recent weeks, we've looked at the idea of identifying trends, support and resistance, false breakouts, all of this. And maybe to wrap up this section, I thought we'd take a quick look at trading using channels. It's really just a variation on the trend line. You have clearly your main trend line. If the market's trending up, a trend line under the lows. If the market's trending down, a trend line over the highs. But then it's using the idea of a parallel line to this to try and give us some sort of feeling as to how far each swing in that trend may go. It's much easier to explain this by drawing it. So first of all, let's take a look at the theory. I think we're all familiar by now with the idea of a trend. Markets trend up or down. And one way of identifying potential opportunities to get into the trend is by using a trend line. So in an uptrend, the trend line goes underneath the lows. In a downtrend, it goes above the highs, and every move back to the trend line, we're expecting that big trend to resume. But what some people will also use is the idea of trend channels, and it's a way really of trying to measure or second guess the size of each of these swings. So a trend channel is really this line here, just projected up, so it's a parallel version of that line. Let's draw it on the chart. So there we go. The assumption is that the market is clearly an uptrend, but these swings are not going to last forever. So we're looking for an area where if the market gets back up to here, to expect it to run out of steam. So maybe if we are trading, maybe as a swing trader, just trying to get these short-term moves, it gives us a place where we can think about possibly taking some profit. So it gives us an idea of how big each swing in the trend may be. So there we have it. It always looks nice and neat in the textbooks and works perfectly. It never works quite this perfectly in real life, but because markets do, I think, have a natural ebb and flow, a natural rhythm, you do see these price channels forming. So I thought, let's take a look at a couple of examples from the world of foreign exchange, a couple of currency pairs, and see how these channels may have worked and helped us when it comes to trading. So what we've got here, we've got pound US dollar, and this is an hourly chart. The bit I'm interested in runs from about here, 14th of November through to the 17th of November. We've got an obvious trend in place, but let's try our trend channel. We can access trend channels from the drop-down list where we draw lines here, and you see we have parallel channel. So let's just put that on the chart. So we've put it on the chart. We've got our trend here running over about 3 days. The top of the channel so far, parallel to this level, has done a good job. So the assumption is going forward, we're a buyer on the trend down here and looking to sell if we get near the top of the channel, assuming it's going to run out of steam again. Let's just jump forwards in time. So far, it's not done a bad job at all. This was to the 17th of November, comes back to the trend line, continues to hold, rallies, but runs out of steam at the top of the channel and comes back to the trend line again down here. So that's one way we can use channels to try and figure out maybe the extent of the swings. And here's an example of a channel in a falling market. So this is a dollar Swiss 4-hour chart from 9th of November. See the market's falling. We could start drawing our trend line in here, and we can project out this parallel line at the bottom of the channel. So we're assuming every time we rally up to here, the market's going to run out of steam. But down here, we might want to think about closing our shorts. Let's jump forwards and see what happens. You can see here, it's done a pretty good job. That trend line has held the market lower. The channel line has proved to be the end of the short-term swings. The market's moved back up again. It's got pretty volatile here, but once again, the trend line's held and the bottom of the channel has held as well. So two examples there that work well. Another way of using these channels, if they break, what some people will do, let's say we're in an up channel and it breaks out the top, they'll look at the height of the channel, let's say it's 50 points high, and they might project that out for the next target if these channels break. But we'll talk a bit more about price targets and channels when we look at patterns such as double tops, double bottoms, that sort of thing. So this week, it's just another little idea, another variation on the idea of trends that may help you try and figure out just how far each swing in a trend is going to go and help you to maybe take profits or adjust your entry points accordingly. that's it for this week. We'll be back next time round, of course, with another section of our trading and technical analysis course. As usual, any questions or comments about what I've covered, just leave us a message down there in the comments. We do read them all. If you like the video, click on the thumbs up. And to make sure you never miss out, this is part of a series. We do lots of other videos throughout the week on foreign exchange pairs, commodities like gold and oil, all this sort of stuff. So if you're not subscribed, if you click on that button there, you get subscribed to the channel and you won't miss out when any of these videos are uploaded. But for this week, from me, David Jones and Trading 212, we'll leave it there and I hope you have a good trading week.